Global markets are teetering on the edge of history, with stock indices flirting with record highs as the world holds its breath for a high-stakes meeting between two of the most powerful leaders on the planet. But here's where it gets controversial. As Donald Trump and Vladimir Putin prepare to discuss Ukraine in Alaska, investors are left wondering whether this summit will bring peace or simply more uncertainty. And this is the part most people miss. While the world watches the geopolitical drama unfold, economic indicators like US retail data and Japanese GDP are quietly shaping the financial landscape in ways that could outlast any political headlines. On Friday, global stocks inched closer to unprecedented peaks, fueled by a mix of cautious optimism and pent-up investor demand. The MSCI All-Country World Index hovered just below its all-time high, with European markets opening slightly higher, adding to the momentum. Wall Street futures also ticked upward, though gains were modest, reflecting a market that's both hopeful and hesitant. For instance, in Tokyo, a pedestrian strolled past a brokerage screen displaying Japan's Nikkei average and the yen-dollar exchange rate, a snapshot of a world economy in flux, yet surprisingly resilient. The Trump-Putin meeting, scheduled for 11 a.m. Alaska time, 1900 GMT, has markets on edge. While Trump has hinted at a potential ceasefire agreement for Ukraine, the absence of Ukrainian President Volodymyr Zelensky and European leaders from the talks raises questions about the deal's durability. Here's the bold truth. Even if a resolution is reached, it may not be the game-changer investors hope for. Shenil Ramji, co-head of multi-asset at Pictet Asset Management, notes that any progress could reduce the risk premium in European markets, but adds, the market has learned not to expect too much from these negotiations. Commodity prices, particularly oil, could react sharply to any outcome, but the real test will be whether Zelensky and Europe are brought to the table for final negotiations. Meanwhile, US retail data due later on Friday is another wild card. After Thursday's surprise spike in producer prices reignited inflation fears, investors are now recalibrating their expectations for Federal Reserve rate cuts. Mike Houlihan, director at Electus Financial Ltd., sums it up bluntly. The chatter about a 50 basis point cut in September is gone. The 10-year US Treasury yield held steady at 4.287%, while the dollar index dipped slightly, reflecting the market's cautious stance. Japan's economy provided a bright spot, with GDP data showing a 1.0% annualized expansion in the April-June quarter, outpacing forecasts. The yen strengthened against the dollar, while in commodities, Brent crude slipped to $63.52 per barrel, and gold inched up to $3,342 per ounce. Cryptocurrency markets, too, found stability after Bitcoin's record-breaking surge to $124,480.82 on Thursday. Here's the question that's dividing experts. Are markets overestimating the impact of the Trump-Putin talks, or is this summit the catalyst for a new era of geopolitical stability? And as US retail data looms, will it confirm or challenge the Fed's monetary policy path? One thing is clear. The intersection of politics and economics has never been more complex or more fascinating. What's your take? Do you think the markets are overreacting, or is this the calm before a storm of volatility? Let us know in the comments below.